Hey, what's up, guys? This is Cody the Coin Raptor, and in today's video, we're going to be talking about another Bitcoin monthly report. This is going to be for the month of December, and as usual, I will have the link to this Bitcoin monthly report in the description so you guys can check it out for yourself. I'm going to break it down for you. I'm going to talk about specifically what they're covering here, and I'm going to go ahead and give my thoughts as well on the report. But before we get to that, be sure to subscribe, hit the like button, and also follow me on X as well. So we're going to go ahead and get right into it. Now, what we've seen so far with the market summary, they've been talking about here how Bitcoin has been consolidating above its technical support. They talk about the 200-day moving average here at about 31,900, the on-chain mean 32,280, and the short-term holder cost basis, which is 35,860. Now, those are levels that ARK tends to look at as being incredibly strong support levels. If we ever do go back down to those levels, those will be some strong supports for the Bitcoin price. Now, they also point out here that in the last year, the price of Bitcoin appreciated 156%. This is one of the best performing assets of 2023, and I think we can all agree that it's been a pretty crazy year for Bitcoin. Very positive, especially if you had bought Bitcoin basically any time within the last year, you're up, which is a pretty miraculous. So they also talk about some of the yield curve inversion and some of the macro indicators towards the back half of the slide deck here, talking about the recessionary indicators, and we'll cover that a little bit more in the back half of the slide deck here. And I especially want to talk about that because I think that that's probably been the most negative part of this report. So we're going to go ahead and go right into the metrics. There's not really many change to this, though. The network usage, active users has gone down. Transaction volume has gone down in the last month. They're saying that these are both bearish signs, and especially with this active owners, that's gone down a double rating here from they're bullish to now bearish. But I don't really think that this is going to have a strong impact on Bitcoin moving forward. It kind of seems more like it's cyclical. You're having more active users during one part of the year compared to another part of the year. Now, the transaction volume itself, I think, is actually going to wind up picking up significantly. And the reason for that is because we had approval recently of the Bitcoin spot ETFs, and that's going to drive demand and thus also volume as well. Now, next you go to some additional Bitcoin metrics here. The realized market returns has been downgraded. The perpetual futures basis has been downgraded, and the expirational futures basis has been downgraded for those market sentiment. But again, I think that this is just kind of more temporary. This is more seasonal. You do have plenty of people taking profits towards the end of the year, and so you'll see that kind of reflected in some of these metrics that they're pointing out. Now, if we go down to the second section here, they like to talk about the bullish primary trend for Bitcoin, the fact that it's remained above 200-day moving average and the short-term holder cost basis and the on-chain mean. They've moved above those levels consistently, and that has been very bullish. And if you divide those, if you divide the price by each of the support levels, then it appears as though we're in the early to mid stages of a bullish trend, consistent with what we've seen in the previous bullish cycles of the bull markets. Here you can see here in 21, they have this little area highlighted. In 16 and 17, they have this area highlighted. 12 and about 13. Those are all your bull markets. So they're just basically saying that you're seeing something similar to what you should see in a bull market. Now, next they go to describing the long-term holder outflows. So they're basically saying that the long-term holders, people who have not moved their coins in 155 plus days, they're saying that they're selling as opposed to taking in. So the net is there's a net loss. Now, I do think that this, again, is a temporary phenomenon, especially I think it's very similar to what we've seen in some of the previous sections of Bitcoin's history. And you can see here that we had back in the 21, March 21, November of 21, and May and July. So it happens actually during the bear markets and the bull markets. Right now, you're just having long-term holders are taking a little bit of profit, is basically what they're saying here for this slide. And again, I don't think this is anything to be worried about. ARK, they view this as being bearish, but I do think that this is just settling seasonally. So we're gonna move on from here, and you have the vaulted coins, okay, or the vaulted supply. So the vaulted supply is the number of coins that have not moved in the Bitcoin network, which compared to the long-term holder supply represents a more comprehensive view of the Bitcoin network. So this has actually remained pretty consistent over the last year. And what we're seeing here is that some of these more dormant coins apparently have yet to be released into circulation. So it kind of feeds in the idea that long-term holders are still very strong. Even though we've seen a little bit of selling in the last month, long-term holders continue to hang on to their coins as opposed to sending them to get sold on the exchanges. Now, next, they talk about the percentage of Bitcoin in profit hitting a 90% level. Now, this is a level that we haven't seen since the last bull market in January 2021. That was the last time we saw those in profit. And like I said earlier, Bitcoin has appreciated so much that if you had bought any time in the last year and if you had held on to it, then you would probably be in profit right now. And so that's one of the reasons why we're starting to see some selling going on in December, okay? Now, they're also saying that speculation is starting to increase with the offshore futures market, all right? And according to the offshore exchange futures basis, it's kind of spiked up a little bit, which means that Bitcoin has entered speculative territory that's more consistent with what you see in the beginnings of a bull market. So they're just kind of pointing this out. According to them, it's neutral, but I think that this is something that you normally see in the start of a bull market. The price runs up dramatically. It keeps moving up all year, and now all of a sudden you're getting more people to jump in and buy and also buy those futures contracts as well. And so we're kind of at a region right now where they're saying it's at 45. It's at about, let's say about 15%. Now, the context for this is that it went up to about 45% during the last bull market. So that was a level of excessive exuberance, whereas right now it's 15, which is more neutral. And if it does get back up to that 45 level, that will definitely signify that there is excessive greed in the market. They also talk about the on-chain activity of Solana. And again, they seem to be proponents of Solana. They say specifically that daily transaction fees hit an all-time high of $778,000. This is total, as the token appreciated 72%, making Solana the best performing large cap crypto asset. And Solana's been a token that I've been personally very bullish on. I've used Solana's network many times, and I've even created my own tokens on Solana. And I do believe that Solana, based on the transaction fees and the speed of the network, actually makes it a reasonable counterpoint or competition for the other layer 1 blockchains, such as Ethereum. So they point out basically here that Solana's simple architecture has enhanced both the user and the developer experiences, making it a formidable competitor. And the fact that, though, that these transaction fees have gone so high, I think is actually pretty surprising, given the fact that even when it was much higher in price, the transaction fees were not nearly as high. So it's pointing towards more speculation, more activity going on in Solana, while that seems to be driven largely by the price action itself. So ARK seems to be very bullish on Solana. I also have Solana holdings as well. That's one of the only other coins that I hold besides Bitcoin. Now, next, we're going to go ahead and move on to the back half of the slide deck here, in which they're talking about recession indicators. So they talk about the inverted yield curve, okay, which measures the 10-year Treasury yield and a 3-month Treasury yield, and they're saying that it has been inverted for in this case, almost 300 trading days. And traditionally speaking, when you have inverted yield curve, that's been associated with a recession, and they're using this as one of their indicators to point towards a recession going to be on the horizon, maybe as far as coming in this year, 2024, we could potentially see a recession. Though I will say that there has been a number of false positives when it comes to a yield curve. Now, you'll hear usually that before every recession, there's an inverted yield curve, but just because the yield curve is inverted doesn't necessarily mean there is going to be a recession, and you can get a false positive instead. Now, this is largely the result of the Fed raising rates dramatically over the last couple of years, and they're basically coming out and saying that this means that there's going to be a recession on the horizon. They also go ahead and just spell it out for you. Here's the recession probability. According to the New York Fed's recession model, and they're saying that it's about a 50% chance within the next 12 months that we could see a recession. Now, I do think that this is going to be not as likely as 50% as long as the unemployment rate holds up. As long as the unemployment rate doesn't seem a spike upwards, we don't see large number of people getting laid off. That, I think, would be an immediate alert, a flashpoint for a recession. But if the labor market remains strong, I think it's very likely we're going to wind up avoiding recession this year. Now, this is important for Bitcoin and altcoins because in a recession, Bitcoin tends to do very poorly unless the Fed does a good job at cutting. We've seen it cut rates in the past, like 2020, and Bitcoin has actually done fairly well. So even if there is a recession and the Fed cuts rates, I think Bitcoin is going to be very strong even during that time, but only if the Fed cuts rates and cuts rates quickly. So they also point out the fact that the M2, or the money supply, has contracted. All right, it's been negative on a year-over-year basis for the past year. This is bullish in their view, okay, because it does tend to lead to a lowering of inflation or even a potential deflation of product prices, just prices of everything in the economy, which is, again, very bullish. This is part of the bullish narrative in which we could potentially avoid a recession. You'd have to have that M2, that money supply, go down, and then you'd also have to have a strong jobs market as well. All right, so in summation, we're going to go all the way back up here to the top. So ARK has talked a lot about those specific 200-day moving average and the on-chain mean, and the fact that that's going to be incredibly strong support, which I would agree with. And they've talked about the fact that the future kind of looks a little murky, which is, if you guys have been paying attention to any of these reports, they've been kind of talking about this for the last 6 months or so. The future is murky. There's a recession coming. Inflation is coming down, but they're not entirely sure about a recession. There are a lot of indicators that point towards a recession, and there are also indicators that go against the idea that we're going to have a recession in the near term. They talked about the yield curve. They talked about investors taking profits, which, again, not a big surprise. Long-term holders towards the end of the year, very likely to sell off, do a little bit. They're definitely going to be taking profits towards the end of the year. Again, not surprising activity whatsoever. And we've already seen a very strong start to January to kind of show that the selling that we've seen in December, I think, was a little overdone and has abated quite a bit. So, again, in the near term, they're bullish on Bitcoin, but very bearish on the overall macro picture. So let me know what you guys think about this report, and if you guys think that a recession is going to be likely, and if that's going to be good or bad for Bitcoin. Leave a comment below, and I'll catch you guys in the next video.